Welcome back. Now we'll look at where markets ended the week of new record highs. This after the Federal Reserve's major 50 basis point interest rate cut. The first cut in more than 4 years, and the kind of cut that we only have seen in times of national catastrophes. So there are now questions about the real strength of the economy given these drastic measures.
The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace.
I guess it shows the economy is very bad to cut it by that much. Assuming they're not just playing politics, the economy would be very bad, or they're playing politics, one or the other. But it was a big cut.
Joining me now is Strategas Chairman and CEO Jason Trennert. Jason, good to see you. Thanks so much for being here.
Good to see you.
With us this weekend. Your reaction to a 50 basis point cut by the Fed this week?
Well, I think, as President Trump was saying, there seems to be something incongruous, right, with Chairman Powell saying the economy is just fine and then cutting 50 basis points, which, as you pointed out, really only happens in emergencies. You know, sometimes you can, sometimes you can tighten by 50 basis points at the start of a cycle, but as we did a couple of years ago. But cutting by 50 basis points almost always means trouble. And it does not seem consistent with the fact that stock prices were close to highs before the decision. Bond yields were low. Dollar is weakening. Gold is stronger. None of those things are really consistent with a need to cut 50 basis points. I do wonder whether, in some ways, it was politically motivated.
Yeah. I mean, look, you can't have it both ways. You can't say, oh, the economy's in great shape and then cut by a massive 50 basis points and promise another 50 basis point cut by the end of the year. Jason, when would you expect this to filter through the economy? When should we start feeling the impact of lower rates?
Well, as they say, the lags in monetary policy are long and variable, and so you don't know. But I will say the thing that worries me, Maria, and you and I have talked about this in the past, is that I'm not convinced that we're not going to have another wave of inflation. As a matter of fact, our work has shown that once you have one wave of inflation over 6%, the chances of getting another wave are about 9 and 10. And if you look at the policies that are certainly being pursued right now, which is very high deficits, a focus on decarbonization or not using fossil fuels, deglobalization, massive immigration, all of those things would suggest that another wave of inflation is not only possible, it's quite likely. And so that's another thing that makes me worried about this Fed cut, is that there seems to be a little bit of triumphalism here. There's a big victory lap on the part of the Fed. And yet it wouldn't surprise me if you had another wave of inflation in 2025. So It would take a while is the first answer. But the second answer is that it could just be something that stokes inflation that hasn't been fully extinguished yet in the first place.
Yeah, and this is such an important point that you are making. I've looked at your work, and I've been worried as well ever since you pointed out the likelihood of a second spike in inflation. And unfortunately, Vice President Kamala Harris has no answers. When you ask her, what is your plan to rein in inflation, she doesn't have a plan. She has not been able to articulate one. So we're watching that. Meanwhile, the former chairman of the White House Council of Economic Advisors, Jason Furman, wrote an op-ed for the Wall Street Journal this week where he said Kamala Harris is the safer economic choice. He says Trump's plans for tariffs, the budget, and Federal Reserve pose a much greater risk. Jason, your reaction to that?
I respect Jason Furman, but the idea that Vice President Harris represents a lower risk to the economy than President Trump is crazy. Just from a stock market point of view, if you take certain proposals like a tax on unrealized capital gains, I can't think of anything that would do more to hurt asset values. If you continue to ignore our own natural resources, our own fossil fuels, as opposed to what President Trump is proposing, which is to drill, baby, drill. That hurts consumers. If you continue to spend money you don't have, running deficits of 7% of GDP, that stokes more inflation. Right. And so the idea that there's some equivalence between Vice President Harris and President Trump, in my opinion, is crazy. And you essentially have two incumbents right now. You have someone that was president, President Trump, and you have someone that was vice president and also voted twice to tiebreakers on things like the Inflation Reduction Act. So we know what the policies are of these two people. It's not a mystery. And one was clearly better than the other.
Yeah, great analysis as usual. Jason, good to see you, sir. Thanks very much.
Good to see you. Thank you, Maria.
Jason Trennert.